Ladies and gentlemen, a very quick one that's very important and crucial for those of you who participate in the promo of the Traded Mastery that just passed. Even if you're not, just pay attention. But that's something that's very fundamental you need to know. And I can realize that most of us, if you are too conservative or you play too safe, you may not pass the account on time. And so that's why I want you to pay attention to the following. Now, first of all, so let's quickly go your regular routine before and after entering the market. Number one, the first thing you must do into your market, the first thing you must do is now you purchase your account. You know how much you purchase. I don't need to know how much you purchase. Now we want to pass the account very fast. And so what do we do and what style? Apart from the signal, of course, you need to follow some of those update and training I've sent for you to be on the trading view, even on the platform on the Arcas X, on the Traders Mastery platform itself, you can see your trading view plainly. So you don't need to even struggle. Now, so number one you must do is that split your budgeted lot into smaller lot for multiple positions to calculate it here. Now, what do I mean by that? Now, what is your account? And there's a rule I gave. The rule I gave is that let's go to number 6. Expose 10 to 20% of your daily drawdown per trade. All right, so we're going to go now. So what do you trade? Let's say you trade gold. Okay, you trade gold, irrespective of what you trade, right? So let's say you trade gold or you trade commodity, whatever thing you trade. Now, okay, so I think there was a signal. That was sent on gold on the GBP JPY. So let me use for instance, this is GBP JPY. A signal was sent on GBP JPY. Now let's do the GBP JPY, and you are taking a trade. Now, but I have already given the standard. I say if it's currency, you can use probably maybe maximum of 100 pips as your stop loss. All right, 100 pips as your stop loss. Now, if it's gold, right, you can use, minimum 100, 150 because gold has so much pips. So now, if that's the case, so let's say now, if you look at how many pips is this one is 48 pips. So let's say it's going to be 50 pips as the stop loss. So if it's going to be 50 pips as a stop loss, now the simple thing I ask you to do, go to this baby pips, this link I sent. I'm going to copy this and give to us, all right, on the group that you follow through. Now you go to this and go to the position size to calculate. Now, for instance, let's start from 10,000 challenge account. So 10,000 challenge account, daily drawdown will be how much? 5%, which is $500. So you're going to type $500 here. And now I say expose 10 to 20% of your daily drawdown. So you now say, okay, 10%. All right. So if it's 10%, now how many pips is your stop loss? 50 pips. All right. Now you calculate. Good and fine. They said the total lot you should use if you want to empty $50. That's what you can afford to empty, $50. Then they say the total lot you can use is 0.1. Now, so 0.1, if you hit 50 pips lots, 50 pip stop loss, that is $1 per lot. $1 per lot because 0.1. So now, and I said, okay, while you are entering your own market, divide this into maybe segment, maybe like now this 0.1, you can divide it to 4, 0.025, something like that, or 0.05. That's 2. If you divide into 2, that's 0.05. If you divide into 4, that's 0.025. Okay, so if it's 2, 0.05. So I've just used that. Now, if your account, so then you go to your trade, right? And then you're going to take trade that way. Now, if your account is 50K, so daily drawdown, right? Daily drawdown, it's how much? $2,500. $2,500. 10% of that with 50 pips or depending, because probably you enter gold. So most of my stop loss on gold may be like 100, 150 pips. So let's say 100 pips. Now you calculate, and it's telling you are going to use 0.25 to lose $250. And now, so you're going to divide this perhaps maybe 0.1 or 0.05 into 3 or something. Or 0.2, okay, 0.05 in 5 places. Stuff like that. I'm just using an example. You do that yourself and be used to it, all right? So that you can manage as much as possible. Now, if you've gotten that, then your stop loss and take profit minimum drawdown, it's your stop loss minimum risk reward is 1:2. All right. So example, let's look at this trade. Look at this trade. 1:2. If it's 1:2, you are going to enter a market and calculating 1:2. Okay, let's go here. 1:2. Okay, so if it's 1:2, look at this now. How do we know it's 1:2? This is 50 pips. So if it's 50 pips, that means you are calculating to make 100 pips. If it's 100 pips, you're calculating to make 200 pips. So now let's look at it. How many pips so far has this one done? Let's look at it. Okay, so let's go this way. How many pips has this one done so far? Let me take this. Okay. Oh, wasting our time. Okay, so I just, because this is risk reward ratio ruler, and that's why most people, when we send signal, most of you complain, I don't know how this. It is very essential for us because that helps you to calculate how many pips so far. Now, this is 27. Now, to this point now, this just like 1:1 at this point, and because some persons will actually get afraid when the market is moving and all of that. So so this is 1:2. So that means minimum profit target you are looking at is this swing low here. If this your stop loss is as high as this, all right? So, but I'm just showing you that what you always need to do as a routine is very crucial. You must prepare yourself to always get it done that way, right? And so that you can be fine and making money and all of that. Look at this now. I send the signal to a particular group. Now, this is how many pips is this? This is just 7 pips, guys. Now, these 7 pips now, you can use, now that means if you work with that is still lesser down your pip you calculated. Now, that may make you to actually even increase your lot size, okay? So at this point, you probably say, okay, I'm going to use 0.1, right? So 0.1. And then it's still within that your lot, because I may not be able to do all this calculation. Now, how many lots is this? 7 point something pips. Now, 7 point something pips, you are looking at 14 point something pips. So at this point now, here, so one take profit, 1:2 is almost achieved, right? Now, if you use 0.1, that's $1 per pips. And if you lose, that's going to be 7 point something dollars. You make the profit is going to be $14. So, but if your account is you are trading with a account of 50,000, you can be using 0. Those ones. So you have to use something bigger, right? Probably at this point, because this is a currency, you may use 0.5, right? 0.5 or 0.2. So 0.5, if it's 0.2, now that means if you lose the money here, you're going to lose $24. Or no, sorry, $14. And then you will make the profit going to be $28. So it make a lot of sense. Now that you have achieved, and then you just get it on. Now, if you're doing 0.5, so that's going to be $5 per pips, and that $5 per pips, so it's dollars multiplied by 7 point something. That, so is it within the range of what you agreed to list out? So 7.4, or like 7 times 5, that's 35, and then you're going to make $70. Okay. Now, this is very, very crucial. You must set aside to follow through so that you can be in charge and build up what you need to build up with. So first, you have to calculate your pips, your lot size, based on your account size. So somebody who would 100,000, your daily lot, your daily drawdown is 5,000. So $5,000, and now so 10% of $5,000. I'm just being conservative. Some people are going to use, because 5%, 10% of your daily drawdown is 0.5 of your total account, right? So if you use 20% of your daily drawdown, that you use 1% of your total account. Okay, so this is it. So if it's 10%, and then you're calculating based on 100 pips, and then you calculate, and then so you're going to use 0.5. So 0.5, all right? So that's about $500 if the market hits stop loss. So with that, you split it into maybe 0.1 or 0.25 in two portions, or 0.2 and 0.1. So 0.2 in two places and 0.1 in one place. And then you go ahead and then look at how to take your trade. And so when signal are sent, you're working based on what you have projected that you can afford to lose to the market. And then you're using the PEEP based on that. So it's very, very important. If you don't do all of those things, you'll just be gambling, right? And then you'll be missing, good opportunity. Now, where you're supposed to make better money, you will make the better money. For instance, look at gold. Now, let's use an example. An instant gold now is pulling back before it will continue moving up. But from the entry here, gold has done over how many pips? I've done over 180 pips. And now this was take profit one. That's about 100 pips, right? Now, up to the point before it start reversing, that's about 181 pips. Good. Now, so 181 pips. So imagine, and you just go and use 0.01. That is a waste of trade, right? You will not pass your challenge on time. So 0.01, that's too poor. That you have to do your calculation, and then so 0. Let's say 0. And I did a kind of a document, and if you don't have access to it, probably you have to go and look for it. And I said, if you are trading with 10,000, you have to check of how much. Okay, so it's very, very crucial. It's very important that you need to work on that and then be able to better every detail you want to better. All right. Okay, sorry. Okay, so sorry for the interruption. Like I was saying, that now, if you look at it, 180 pips, and now if you 0. Let's say 0.02, right? 0.02, that means 20 cents. So it's going to be 0.2, that's 20 cents, multiplied by 100 pips. So for instance, 0.2 multiplied by 100, right? That's going to be $20, right? Because if your account is small, so that's where you'll be doing that, right? But if your account is big, the least you'll be using by 0.05. So 0.05 is 50 cents, and you have 100 pips or 180 pips. So 180 pips by 50 cents is $90. And you have like three positions like that. So $90 multiplied by three, $270. And that's what you do. And so remember, like this account that most of us have paid for, and then for the promo account that you're going to just do level two, right? So that means you're targeting to make about how much profit? If you're $50,000 account, you're targeted to make $2,500. And if you're on $25,000 account, you're targeted to make $1,250. And you're for on $10,000 account, you're targeting to make about $500. Come on, that's fast. Now, but remember, now other thing you need to pay attention on is very simple. Now, what's that? So exit at your satisfied profit if you cannot wait, because sometimes you could be fidgeting. Now, put to your mind, once you get to this price, I'm going to exit. So exit, for instead of waiting and you do not know what you're doing. But I always tell that. Now, trail your stop loss to break even after TP1 is crushed. For instance, look at this trade now. If we look at gold, let's look at gold. Where's gold? Let's look at gold. If you look at gold, for instance, when gold crossed the first TP, yeah, so the first TP was here, right? Now, the stop loss that was down here will be moved into this entry point, all right? So that if the market crashed down, then you would not be affected with your money. And remember, you have taken one part of the profit, and then if you crash down, you just take you out. So that means you just half your profit. You understand? And but most time when TP1 has not been taken, and then you trail stop loss, it can take you out. For instance, look at this signal. This signal was dilly-dallying before eventually play out. Now imagine because the market just moved, somebody now uses stop loss and push it here. Maybe the market just moved little here. Now it's going to stop you out and the market still continue going to where it was going to initially. And so that's why you don't just trail stop loss anyhow, but you wait until exactly when it has created a swing, right? A swing low or swing high. Now you expect that, okay, that swing high or swing low is already an entity on its own. And then the market is going to come back, will not hit to that point. And that's where you trail your stop loss. It's very, very important. And so that it can protect your capital. The next is allow at least one position to trail the trend till obvious. What do we mean by obvious? That is, you have taken profits on 1, 2, 3, and that's the most important reason why you actually even split your trade into different portions. Now, you have taken trade, you have taken profit 1, profit 2, that level, and the account, the trade or that the instrument continue to ride as much as possible. Now, you're going to allow the remaining one to actually follow it. Sometimes it can follow and continue to trend to a very long time trend, and that will give you so much money. And that's how you can actually maximize more profit. Okay. All right. So, of course, I've said expose 10 to 20%. So, depending on what capacity and understanding you have. So always remember, that you must not make more than 60% of your profit target in a day. Now, if you're on level 2 of Tradexmastery, there's consistency rule that says, okay, now if you're on $50,000 account, right? If you're on $50,000 account, you cannot, all right? If you're on $50,000 account, you cannot make more than 60% of that, what you're supposed to make in a day, right? So that is, you have to be cautious. So even if you see beautiful trade, once you see that you're making profit, and it gets into 60% for that day, stop. All right. So you can see that's what it means. So 60%, all right. So 60% of 1,000 or 2,500 maybe 1,500, and they will show it to you there. That is the 60% of your account. Let me just check if I can see an account. Then that will show you an idea. So let's look at an account. Okay, let me check. Oh, 3. Right. So let's check. Let's check. All right, good. Let me see challenge account. I'm going to show you guys now. Makes sense. Okay. Let's go, guys. Let me show you. Okay. So look at it. Now, this is 50,000. No, sorry. Let's go to the one that is of that. So let me click on detail. You're going to see. Good. Now, here is this. Look at this is 100,000 now, stage 2. And look at the rule, right? Highest profit per day. This has not started. I've not opened this one. I opened the other one. Overall profit and loss, 24 hours loss, nothing. Daily lowest equity, it's the same. Daily starting balance, the same. Daily starting equity is the same. Okay. Now, initial limit, 5,000, remaining 5,000. Yeah. So, permitted losses, maximum, all right? Maximum 10,000 because that's 10% of 100K. Okay. Yeah. So here I said nothing has happened here and all of that. Now look at what's going to happen here. It said suggested daily profit. Suggested daily profit. It says $3,000. That's 60% of 5,000. That is your target. Okay. You say highest day profit, nothing. Okay. So that's one of the things you need to understand. Now, when after days pass, it will reset again, you're going to see it. So you shouldn't make more than $3,000 in a day. For your total target to cross this account into a live account, it's $5,000. So get to understand that. Okay. All right. So it's very, very important, and so that you don't abuse your account and then waste your energy. Okay. So now let's go to other things. Okay. Okay, so always remember that. So understand that there are three ways of entering the market. Number one, reversal point. Number two, pullback or retracement. And number three, breakout and retest. So most time when a signal was sent and you were not there or you didn't take the signal at that time it was sent, very simple. Stop thinking, oh, I missed it. You didn't miss it. The market is not over. It's still active, right? So what you do, for instance, this trade now is like a reversal. So if you look at it, the market was coming down from somewhere and came down here and then had the lowest point here. Right. Now, so after the lowest point here, if I can go to 5 minutes to show you probably how the market actually play out. And now, so the market came down here, right? So this is high, this is low, this is high, this is low, and this is high. All right. So this is a high, and then this is the lowest point. Now the market needs to take out this high that created this low, which it did here, and then pull back and probably again move up and take out the next one, and then that's where we'll find an entry. Now, of course, there are snapper entry that could take us out probably when we go back to 1 minute, but nevertheless, no problem. Now, this trade has been sent as signal, people entered it and they're riding the market, enjoying themselves, right? And you can, when the market was somewhere here or here, what you need to do is to wait for the market to pull back. Simple. And then once you pull back like this that happened now, you are now entering the market. Does that make sense? All right. So at that point, you are entering the market safely. Okay. So you now say, okay, let me look for a way to enter the market. For instance, let me go to this point. So you were not there when the signal was sent initially. So at this point now, you're waiting for a pullback before you find an entry. So let me look for trade locker. All right. So you're looking for a pullback. Now, example of pullback was here. Okay, this is not gold. Let me look for gold. XAU. XAU. Makes sense. So now this XAU, when you came, the market was here. So you're waiting for pullback. Now the pullback has already happened, so it's moving up. So let me say I'm taking an entry. We don't even know this account I'm in. So I just enter. Okay. Now, so you that have just entered now, your stop loss definitely is not going to be like those other people. So where is going to be your stop loss? Very simple. You can check based on your own markets. Remember? But look at it. Where is the lowest point before this high? This is not. This is not. This is the lower. This is the swing before this swing high. This is swing low. So your stop loss is going to be below this swing low. Yeah. So you don't never mind because you may not be able to do your calculation appropriately. And so now what do you do? Then you go to your account. Okay. You go to your account and then click on the edit. So say stop loss. This is a swing low. So your stop loss is going to be below here. That's 3311. Okay, that's like the entry of the initial account. So 3311 is your stop loss. 3311. say you're going to lose $70. Okay, then you're going to look at how much will be your take profit. I'll be able to say, but let's say 3345 or something. Yeah, so it's not up to 1:2. So let's say 3367. Oh, okay, so 3360. 70 multiplied by 2, that's 40, 140, 3350, something like that. 3350, 3356, 3355. Okay, so this should be okay. 3355. And then you now click and allow the market to run. Now, so but there's something here, so the market is still dialing. That means this pullback is not yet over. The pullback is not yet over. So the pullback will still return back here. Now, when you are in the market and then the pullback actually return back here, what do you do? What do you do? Very simple. You pull back here, you now find an entry, you take in, and then enjoy your ride. So that's how you actually find an entry. Either you enter at the pullback, or you enter either you enter at the reversal and then maybe let the market, or you enter at the pullback, or you enter at the breakout or retest. So that means a resistance was broken, and so like this now, that thing is a resistance that was broken, and then it's retesting back to the point, and it didn't retest properly anyway. So you are now finding an entry. So you enter at the reversal, you enter at a pullback, okay? You enter at a reversal, you enter at a pullback, you enter at a breakout and retest. Okay, so now the next is avoid too much noise, both from your mind and also from external sources. Sometimes you can be so cloudy, you just be dialoguing with yourself. If I enter now, will it not hit stop loss? If you go hit stop loss now, I will lose the money. What should I do? Okay, let me wait. Let me see when it come back more. If you pull back more, I will enter, and all of that. These are noise. It will not allow you to be profitable. So you just be waiting for nothing until when the market gets out of your hands, you're now running after the market. It doesn't really make sense. It affects your productivity and your profit or result, as it were. You make your decision, and then once you make your decision, other people are saying, the market is going to crash and all of that. You have entered, so what do you do? Say, let me quickly exit. The way they are saying it's going to crash, that's noise. You have entered, you have told yourself, this is what I can lose if it happens this way and all of that. So why are you bothering yourself unnecessarily? So, ladies and gentlemen, this is how you should face the reality. And of course, other thing you need to learn, of course, go to your platform, you can do your analysis, and you remember what we use in our platform is simple support and resistance strategy that's going to walk you through to make money as simple as possible. All right, so thank you very much, everyone. So pay attention to every detail that's been sent here so that we can maximize our profit. My name again is Medasifak Jimo. Together, we rise in Plan B Express. Thank you.